Hey everyone, and welcome to today's Explainer. I am absolutely thrilled to have you hanging out with me today. Look, if you love taking a step back, making sense of massive data dumps, and spotting those hidden patterns that are literally driving the world economy right now, well, you are in exactly the right place. Today, we're going on a comprehensive geographical tour of the global financial markets, and we're looking at all the latest worldwide trading indices and reports. We're going to look at everything from the major indices in Asia and Europe all the way over to the Americas. And then we'll tie the whole shebang together with the currencies and commodities that act as the connective tissue for all these global economies. So buckle up and get ready for a pretty fascinating journey across the global financial map.
So here's our roadmap for the tour. We're going to start with a broad global market snapshot, travel over to the Asia-Pacific region, move into EMEA, cross the Atlantic to the Americas, and then bring it all home with currencies and commodities.
All right, Section 1, Global Market Snapshot, the macro view of the world economy. Okay, let's dive into this. The entire day is really defined by this one massive shift in capital. We are looking at two highly contrasting forces at play. On one side, you have a weakening US dollar index, which is actually on track for its biggest weekly decline since April. Now you might be wondering, why does this matter? Well, this drop is being driven by shifting expectations that interest rate cuts are practically imminent. And when the dollar weakens, all that capital starts looking for a new home. That brings us to the other side of the coin, a significant rally and resurgence in global precious metals. Keep this overarching dynamic in the back of your mind as we go through and see how different individual countries are reacting to it today.
Let's move to Section 2, Asia-Pacific Trading, and see how this builds into what we're calling diverging fortunes in the East.
We are seeing just an incredible divergence in the East today. It's wild. Japan's Nikkei 225 is posting really strong gains, up 1.47%, and Hong Kong's Hang Seng is right there with it, climbing 1.28%. But then, look at South Korea. The Kospi has just taken a brutal hit, plummeting nearly 8%, 7.89% to be exact. It's a powerful reminder, right? We talk about Asian markets like they're the single unified block, but they are distinctly different economies reacting to totally different internal and external pressures.
So the crucial point is, why is Japan's market surging while others are stumbling so hard? It really comes down to the Japanese yen, which is currently sitting at a 40-year low. 40 years. For an economy like Japan's, which relies heavily on exporting manufactured goods, a weak national currency actually makes their products way cheaper and therefore much more attractive on the global market. And that naturally translates to higher corporate profits for Japanese multinationals, which in turn drives that nearly 1.5% surge we just saw in the Nikkei index.
Moving westward now to Section 3, EMEA market moves. Steady greens across Europe and Africa.
Over in Western Europe, we are seeing this beautifully unified wall of green across the major indices. You've got Germany's DAX up 0.78%, Great Britain's FTSE up a modest 0.25%, France's CAC 40 gaining 0.39%, and Spain's IBEX leading the regional pack with nearly a fuller percent increase at 0.92. What you really want to take away from this is that despite all the ongoing global uncertainties right now, European investors are expressing steady, calculated confidence today. There are absolutely no massive swings here, just solid, broad-based buying across multiple sovereign markets.
But you know what? The real standout in the MEA region today isn't actually in Europe at all. It's down in Africa. Just take a second to look at this impressive number, up 2.19%. That is the daily gain for Nigeria's NSE All-Share Index. While the European markets are charting these very steady, incremental gains, this robust performance in the Nigerian market really highlights the explosive growth potential and, frankly, the aggressive capital movement that's currently happening within emerging African economies.
Crossing the Atlantic now for Section 4, the Americas in focus. A tale of two sectors.
Okay, if Europe was a story of unified stability, the United States is showing extreme divergence today. It's fascinating. The Dow Jones is up 1.14%, but the tech-heavy NASDAQ 100 is down 1.61%. And this brilliantly illustrates the massive tug-of-war happening between surging industrial blue chips and a struggling tech sector. Because of that exact tension, the broader S&P 500 is perfectly flat, literally a 0.00% change. Capital isn't necessarily leaving the U.S. market today, it is just aggressively rotating from one sector to another.
I want to pluck this dramatic number out just to emphasize the sheer scale of this sector rotation. Up 594.83 points. That is the sheer point volume of the Dow Jones Industrial Average's leap today.
Investors are actively and aggressively pulling their money out of those high-growth tech stocks, and they are seeking safety and value in the established, dividend-paying companies that make up the Dow. So what is causing this split personality in the U.S. markets? Well, a lot of it comes down to some highly mixed economic signals. On one hand, we have steady but slowing U.S. job growth from June. But that is juxtaposed against U.S. job openings that were much higher than expected in May. For investors, this is incredibly confusing. Is the economy cooling off, or is it still running super hot? That uncertainty is exactly why we're seeing capital flee the riskier tech sector and sprint toward the perceived safety of those Dow industrials.
But if we look south of the U.S. border, Latin American indices are largely just ignoring that tech drag happening up on Wall Street. Ecuador's BVQ is up an impressive 2.20%. Argentina's Merval is up 1.26%, and Brazil's Bovespa is up 0.74%. These regional markets are absolutely marching to the beat of their own drum today, posting strong, confident gains across the board, regardless of what tech is doing in the States.
Finally, let's wrap this up with Section 5, Currencies and Commodities, the connective tissue of global finance.
We're going to return to the U.S. dollar index, which is currently sitting at 100.570. As we noted right at the very beginning of our tour, this slight decline is a massive driver for global action today. Why? Because oil, gold, and most global commodities are priced in U.S. dollars. So a weaker dollar instantly makes those commodities cheaper for foreign buyers to purchase. It's a direct catalyst.
Now, what's really interesting about this slide is how powerfully the commodities market is reacting to that weaker dollar. Gold futures are up nearly 1.5%. Natural gas is up 1.5%, right in the middle of a really volatile energy sector. But look at silver, up an incredible 2.99% today, almost 3%. When currency yields look weak, investors rush to hard assets. We are seeing a classic textbook resurgence in precious metals unfolding right before our eyes on the trading floor today.
Which brings us to our final thought. We've toured the entire globe today, right? We've seen a weakening U.S. dollar, wild sector divergence in the U.S., surging precious metals, and distinctly unique reactions from markets in Japan, South Korea, Nigeria, and Latin America. All of this data tells a story of capital in motion. It's like a giant puzzle, and the markets are desperately trying to find their footing in a rapidly changing economic landscape. So, I want to leave you with this question to consider. With all these interconnected parts shifting at the exact same time, where will global capital flow tomorrow? Thank you so much for joining me on this explainer. Keep analyzing that data, and as always, stay curious.